Hi, and welcome to this week's edition of The Pit, Personal Investing Tools and Techniques for the Active Trader and Investor. This week, will the dollar index continue its breakdown? Will Bitcoin continue to drop? It fell and hit my exact target of $112,000 and has since then broken below that level. This is The Pit, Personal Investment Tools and Techniques for the Active Trader. My name's Lundy Hill, and this is not investment advice. These are the charts I found interesting for the week ending August 22nd, 2025. First, let's go to the S&P 500 or the ES futures, as I like to trade, and I like to trade the micro ES also, as it allows me to do multiple contracts and peel some off. ES is still on track for my 7,200 target. And with NVIDIA reporting earnings today, I'm recording this video on Wednesday, a little late. Friday, I think 7,200 is on track for the next few months. Friday was a big up day thanks to Powell's interest rate comments. I think when a crisis comes, and it will come, the Fed will lower rates dramatically. Possibly to zero, possibly lower. I've heard that negative interest rates were actually discussed in the 2008 crisis. Banks would actually charge a small interest to keep money in the bank. Anyway, onto the charts. This is the ES futures contracts. You can see it broke out of the dynamite triangle to the downside. Prices fell right to the high of that low bar, which I've highlighted with a horizontal line. Their prices had a tweezer bottom with one inside day in between. Note the tail lows on Wednesday, Thursday, and Friday. This is a sign of buyers coming in. My father used to say when charting, "What's wrong with?" And then he'd make the comment, "What's wrong with Here, I would say, what's wrong with having a buy limit order in a few ticks or a few points above the high of that low bar? And you put a stop around a little bit below the low bar, the high or the low of the low bar. So you'd be buying right around 63.80 with a stop loss. You could even put a stop loss 1/4 to 1/2 of an ATR below that limit. And especially after Wednesday's bounce off of this level, Thursday would have been an even lower risk entry, as Wednesday's low was a clear stop loss level. And then the same thing plays out on Friday. And prices rallied Friday right to the apex of last week's dynamite triangle. I've highlighted the dynamite triangle starting on the 13th and extending 2 or 3 days. There. Friday also reversed the previous 5 closes, and that is very bullish. Next, let's look at the ES 30-minute contract. Here we see Thursday had a few strong bounces off of the support line that I've highlighted in the previous chart. And Friday's open and first 30 minutes was strongly bullish and a definite signal to buy. Why? Well, first, prices gapped up above Thursday's entire afternoon session. Second, the first 30-minute bar closed above the prior day's high, another very bullish sign. And also, the first 30-minute bar closed above the close of 2 days ago. I like to watch the close of day 2, which is 2 days ago. You could buy on the close of that first 30-minute bar, or wait for the 30-minute bar breakout. This is an opening range breakout, which my father was one of the first people to do it. My father started talking about and trading the opening range breakout in the 1970s. He gave seminars on it in the 1980s. I gave seminars in 7 different countries in 5 different languages on the opening range breakout in the 90s and early 2000s. And I created a couple of systems, day trade and swing trade systems, based on the opening range breakout. These are called the Stafford day trade system and then the Stafford Universal Swing Trade System. Prices lately have formed a reverse L formation up into a pennant. This is a strong rally up with congested sideways narrow range action sideways. And that forms, if you imagine it, an upside down L formation. And this is bullish. And I expect prices to rally out of the formation in the same way they rallied into it, and that would be up. I expect a 75 to 100% rally out of it, 75% to 100% of the move into it, I expect that amount out of it. Or about 63.90 to 64.90. So 75 to 100 points higher. Next, let's look at, well, here's my overall play on the S&P. I think this year has formed a large cup and handle pattern. This is Investors Business Daily's and William O'Neill's pattern. And we see in July you formed the handle of the large cup and you broke out in late July. And that breakout is still active. And this puts a price target equal to the distance of the cup bottom to the handle, and that gives me a price target of around 7,200 to 7,400. Next, let's go to the NASDAQ 100 chart. Here is the same play that I talked about, the what's wrong with play. You buy at the high or slightly above the high of that low bar back in the first day of August, with a stop below the low. That gives you your risk, R. And then you take 2R profit, or maybe even 1.5R profit, which you hit on Friday. So that's a nice 1.5 to 1 risk-reward ratio. So this is very good. Next, let's go to the dollar index. With the Fed lowering interest rates, possibly next month, the dollar should be weaker. And that's what I'm showing here. The Dixie, DXY, has been a little confusing lately to me, but I think it's finally decided. I've got a head and shoulders pattern marked out here, and Friday, prices broke below that neckline at number 4. The target down is a measured move equal to the move from the head to the neckline, projected down from the breakout of the neckline. That puts a price target down below 95.50, so a nice little move there. Similar to the dollar index, let's check out gold, my favorite chart, my favorite market. Gold has been forming a tight, well, not necessarily a tight, but a coiling pennant formation, and I'm expecting a breakout to the upside, and I've got 3 different targets. I've got one, the yellow line, and I've highlighted this in previous videos. The yellow line is the move into the triangle. The red line is the move immediately prior to the triangle. And then the green line, the shortest line, is the widest distance of the actual triangle. So that gives us several different targets on the upside. And with all the action, with all the Fed spending, with the big beautiful bill, I think there's nowhere to go but up on gold. Here I've zoomed out and shown you these price targets on the A, B, and C, with A being the shortest and C being the longest. The widest target puts a target of $4,300 before the end of the year in gold. So that's almost $1,000 rally or 30% rally from here. Next, let's go to crude oil. Again, the Fed lowering rates is not good for the dollar or anything, but it's good for things not priced in dollars, because a weaker dollar means you have to spend more of them to get an ounce of silver, an ounce of gold, or a barrel of crude oil. This week, on the weekly chart, it's not shown here, but prices on crude oil had a bullish engulfing bar. Prices are in the buy zone from the big rally up from the May lows to the June highs that I've highlighted here. You're in the bottom 1/3 of that range. So I think you've got to try to find a reason to buy the market here. And that's the low risk trade, I believe. And I've highlighted a possibility that maybe this big pullback from June highs to the August lows is a large ABC correction down. So maybe we're ready to test the highs at 77.48 that is highlighted up at the top there. Next, let's go to some grains and look at the soybeans. Soybeans had a big breakout of the dynamite triangle. And a dynamite triangle, like I've said, is just a wide range move into a tight congestion zone. You could call it a pennant, but I like to think that it's a tighter pennant formation. Last week, I noted the big up move and a longer term downtrend could be a great time to sell calls and sell volatility for a pullback in price and volatility. And this played out well for the first 3 days of last week, or that 2 weeks ago. If you sold short-dated calls 1 to 2 standard deviations out of the money, maybe they decayed by half to let you take profits. Next, let's go to coffee futures, everybody's favorite drug. This is what I highlighted a couple of weeks ago when I did a Substack post on Joe Ross's 1, 2, 3 pattern. You can read that post on my Substack. I'll link it above. Prices pulled back and then had the 1, 2, 3, which is basically the primary move, a short rally off the low, and then a retest and failure of that move. Joe Ross, a great technician, called that the Joe Ross 1, 2, 3 pattern. And I highlighted this on the end of that second day in August. Actually, these are weekly bars. The second week in August as a buy at 334.20. And I targeted a price target of about $3.80 to $4 range. About 75% of that, so maybe $3.60 to $3.70 to $3.80 range. Now let's bring you up to date and show you exactly what happened. Boom. Prices rallied right up to my target. They broke 380 range, but if you had your price target in at 370, you missed a little bit of the profit, but so what? That's a great move. That's many, many thousands of dollars. Of course, past performance is not necessarily indicative of future results. I highly recommend studying Joe Ross and his patterns. I've got a PDF I can send to anybody who's interested. But note the move from that 1, 2, 3 pattern, only one day made a lower daily low, but that was a clear out day. That was about 6 bars ago. It cleared out and closed above that prior day's high and above its open. And also you had a pattern 9 buy day. You can read about that in my 9 patterns that signal a trend change. So that was a very strong pattern also. So just multiple buy signals in this coffee market to generate thousands of dollars of potential profit here. Finally, let's go on to Bitcoin. Here's my call a couple of weeks ago in Bitcoin. I noticed that Bitcoin made all-time highs. This was about 4 bars ago on this chart. It made these all-time highs above 124, and then the large red candle day was a 2-bar flip-flop, also a bearish engulfing bar that has a higher high and a lower low and a lower close than the prior bar. This to me signaled that this was an up thrust and a 2-bar flip-flop and that lower prices are coming. 2 weeks ago I said prices would probably rally or react down to the $112,000 point. Now let's bring you up to last Friday's action, and we can see that's exactly what happened. The lower line, the lower horizontal line, is the $112,000 mark. Again, past performance is not necessarily indicative future results, you can lose money trading. But that bearish engulfing and my father's 2-bar flip-flop exactly called that. And note that you've had a bullish engulfing bar 2 bars ago to signal that that might be a potential bottom, but we know that it's not because I think prices have pulled back and made new lows. I hope you enjoyed this issue of The Pit. Please like and subscribe. If you have any questions, leave a comment with your questions or any observations you find. Thank you and happy trading.